Hello, it's Adil, Mr. Intermarket Analysis, bringing you a review of the FTSE 100 for Monday's trading, the 10th of February 2014. Okay, so another week and obviously another task in order to tackle this market, basically. Okay, so first of all, I think I've already given you an explanation with regards to the S&P 500 and why this market obviously is short squeezed higher on Friday, and obviously the games that are being played in the markets right now. And given the fact that the Federal Reserve is obviously actively manipulating that the markets remains high, especially when they want to destroy a H&S formation, they obviously hire technical analysts in order to do that. Okay, so that's basically what's happening right now. The Fed wants the markets higher regardless of the emerging market concerns that have obviously afflicted the markets and caused the markets to go lower. Not only do you have emerging market concerns, you've got slower growth, the emerging market concerns, unemployment problems, obviously as we can evidenced in the US, and adding the fact that you've got Chinese debt concerns as well, and China's been lagging for the last 6 to 12 months, okay, in terms of its economy and the index itself as well. It's not looking good, okay, adding the fact that you've got the Australian bank actively trying to manipulate its currency down, even though that the economic data doesn't justify that, so there's a real concern there. Same thing with regards to the ECB, even though the economic data justifies the currency going down, yet the ECB refrains from acting. So there's a lot of conundrums out there, okay, a lot of conundrums with regards to almost every variable, and that's what makes this market tricky. Well, as always, the markets are always tricky, but it's just another facet, okay, with regards to understanding the market. So basically, what do we have with the FTSE? Okay, for the FTSE 100, basically you've got the concerns with regards to Mr. Carney's forward guidance. Obviously, that's the big misnomer really at present, or the big shall we say puzzle that everybody's trying to crack with regards to interest rates and the currency. Okay, so obviously interest rates going higher. Obviously, given the fact that the FTSE 100 obviously has had quite a stellar move higher, and given the fact that the FTSE is very vulnerable to emerging market concerns and the profits that obviously that come from that direction, obviously the FTSE itself has been under some severe pressure now. On the weekly chart, we are making a H&S foot a top. Okay, so that could be due to a number of reasons. It could be emerging market concern, could be Chinese growth slowing and debt concerns there. Could be obviously we've got a new article over the weekend regarding European banks that are in trouble. I need to plug their holes. Okay, with regards to stress tests coming out in the next week or two. So there's a lot of concerns there. Obviously, rising interest rates, obviously in the UK. Add that in there. Okay, a lot of towards the end of the week we had some weak economic data as well with regards to the FTSE itself. So whether that recovery is sustained. So again, there's a lot of obviously headwinds, given the fact that obviously tapering as well. Tapering obviously is a big taboo as well. That's a big hurdle that we have to cross. Add that variable in there as well, and it certainly makes it hard to forecast. Okay, given the fact that economic obviously data in the US or jobs in the US are not as fantastic as everybody expected, even though it can be blamed on the weather, we'll still need more data just to confirm. Okay, so again, forward guidance almost with every central bank is a problem, and obviously with regards to the ECB intervention is a problem as well. Okay, so they're basically the variables that we have in play. Now, which variables are the most important? Okay, the most important variables right now will be obviously emerging markets and interest rates and forward guidance. Okay, with regards to FTSE going into the week ahead. Now, weekly chart, as you can see, let's look at the technical side of things now. Weekly chart, as you can see, we 6850 is a rock. Okay, I am swing short the FTSE on the fundamental analysis service, expecting a move lower. As you can see, H&S target around the 6,000, if not lower. That's certainly what I'm looking for on the downside. Okay, let's have a look at the daily chart. Okay, daily chart, we're into the 200 MA. We put in a doji there as well. Okay, we have retraced 38%. So adding all those variables, and we are going lower. Okay, so that's basically my interpretation going into next week. Certainly looking for a move or thrust lower. If you do obviously go higher, then obviously the resistance levels are 6630. Watch out for that. Then obviously the next level is around 6650. So watch out for those two levels there. Obviously that's the 50% retracement, the 6650 level. Obviously that will put in the lower high. And then obviously we should start to thrust lower. Okay. Okay. Now let's have a look at the 60-minute chart, see if we can get any sort of direction from there. Okay, so obviously we've been holding this key trend line, so watch out for this trend line to certainly be broken. Okay, it's to a large extent you can certainly say it's a rising, expanding wedge pattern, which isn't exactly bullish. Okay, but having said that, like I said, 6,650, possibly touch the 200 MA above. That's more. Obviously, that can be a possibility, but very unlikely from my perspective. I don't expect that happening at all next week. Okay, yes, we have put in a double bottom. Given the fact that the emerging market concerns are still there, I do expect a thrust lower. And the reason why I expected a thrust lower was predominantly because of the fact that we had the S&P 500 with the H&S formation, which, as you can see, has been negated. So again, we'll have to tackle that on Monday and see exactly how that plays out. Going into Monday's trading, though, there is a H&S formation in play. We'll see exactly where the FTSE obviously opens up on a Monday. But having said that, I'll certainly be looking for this H&S formation to play out. Obviously, the bear flag played out perfectly. Looking for a right shoulder there, and obviously making our move southwards. Obviously, if we can put in a double top here at around the 6590, 6600 level, then obviously that will be the head. And then obviously look for a subsequent right shoulder and see how this pattern plays out. Okay, so certainly keep an eye out for the FTSE with regards to that. So 6595 is double top resistance. That'll be the first hurdle. Obviously, if the market does push higher than that, provided Asian markets are higher, then yep, certainly watch out for the next resistance level, which is around 6630. 6640 and 6650, 6670. Okay, so these are all the levels on the 10-minute chart. Other than that, I can't really give you any other guidance other than that with regards to the FTSE going into next week's trading. I certainly expected this level here to hold. Obviously, the 6590 level. Obviously, given the fact that the futures market blasted through the 66 level. My stop loss on the day trading was 6606. It got clipped. So obviously the next level now is going to be 6630, 6650, 6670. Obviously that'll be a resistance, and that'll be certainly a level that I'll be looking to short the FTSE. More than happy to do that. Short the FTSE in that area. Okay, so that's basically what I'll be looking to do. Okay, going into Monday's trading. Let's have a look at the FTSE 250. See if we can get any signs or clues from there. Okay, which I generally tend to do. FTSE 250, as you can see, we are into the 50% retracement now. Previous support equals resistance on the daily chart. Okay, let's have a look at 60 minutes, see if we can spot anything. Okay, 60-minute double top, 200 MA. Resistance on the 60-minute chart. Obviously, again, similar type of exhaustion pattern here as well. So just keep an eye out for this potential H&S looming here as well. So keep an eye out for that. Okay, so really at the moment, that's all we've got, really, to be honest. Within this level here, horizontal support here, nothing really, to be honest with you. Again, the only thing that we have to keep an eye out for is the unfilled gap, so keep an eye out for that. Okay, going into Monday's trading. Okay, and that's it, folks. So risk on, risk off, wax on, wax off. Goodbye now.